This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com. Depreciation again, but this time we're going to look at the revaluation of non-current assets. Now, non-current assets usually clearly fall in value. Machines, cars, they fall in value. And we depreciate. We've been through the rules, we've been through the entries, and you must depreciate. There is no alternative. If it's an asset which has a limited life, you have to depreciate. It's a rule in the accounting standard. However, it's certainly the case that some assets in real life perhaps increase in value. An obvious example is buildings. That although we're depreciating the building each year, and we may have a building in our balance sheet with a value of 100,000, it could be the case that we know the building is worth £500,000. Well, you are allowed in that sort of situation to revalue. It's not something that we normally do very often, but you are allowed to revalue. You have to get in a professional valuer and make sure it's valued properly. But if you want, and if its actual value is higher than balance sheet value, we are allowed to replace with the new value. And let me show you how the entries to achieve that. Can you look at example 5? Purpose has a year end of 31st December each year. In our statement of financial position or balance sheet at December 2002, we've got buildings at a cost of 3.6 million and accumulated depreciation of 1.08. And our policy is to charge 2% straight line depreciation. On 30th of June 2003, the building's going to be revalued at 3.072 million. And we want to write up the T accounts for the year to 31st December. Let's have a go. First of all, let's bring forward the balances at the start of this year. Our year end is December. On the 31st of December, and therefore 1st of January 2003, we had a balance on a buildings account. This would be the original cost of 3.6 million, a debit balance, an asset. We've been depreciating it, and the totally accumulated depreciation there's a balance of 1.08 million, a credit balance, to reduce the value of the buildings. So on last year's balance sheet, the buildings would appear at the net of those two figures. We're going to revalue it on the 30th of June. Well, at the moment we're at the 1st of January, so we must carry on depreciating as normal up until the date of revaluation. So what's the depreciation charge? Depreciation for the first 6 months well, we're depreciating 2% straight line. Now it's straight line, so it's an equal amount each year. It's going to be 2% of the cost of 3.6 million. However, remember, that's the charge each year. We're only doing it for half a year, so it'll be 6/12 of that. And so, 2% of 3.6 million is 72,000 for half a year. It'll be an expense of 36,000. £72,000 a year, half a year. So let's depreciate. The entry is always credit accumulated depreciation, 36,000, debit the depreciation expense account. Credit the accumulated, debit the expense. No problem. Okay, now we come to 30th of June. We've done our half year's depreciation. We're now going to revalue. The value of the building at the moment, of course, it's 3.6 million on buildings, less accumulated depreciation of 1116, the balance on this account. Now, I'm not going to work out the difference, but 3.6 million less 1.1 million, about 2.5 million. We want to revalue it at, for some reason, at 3.072. How are we going to do it? Well, first of all, let's effectively change the cost. On the buildings account, always we show original cost or revalued amount. So let's change that to 3.072. To change it, I'm going to surely have to credit here with the difference. The difference, 3.6 million minus 3.072 million. The difference is 528,000. If we credit with 528,000, we'll end up with the revalued amount. We need a double entry, clearly. The double entry will put the difference to a revaluation account. So we'll credit the buildings, debit a revaluation account, with what was it? 528,000. And so, that's building sorted out. What balance are we left with? The balance on the account is what we wanted, 3.072 million. So, that's that bit sorted. We change the cost account to the revalued amount. It may be higher than 3.6, or as here, may be lower, but debit or credit to get the value we want, the double entry to revaluation. However, what about the depreciation account? We're starting again at the new value, so it used to be cost less depreciation. But we're starting all over again with a new value of 3.072. We don't want to deduct that depreciation. And so we remove the accumulated depreciation. To remove it, if we debit with 1116000, the balance, of course, will be 0. Double entry, we credit the revaluation account. Sorry, what was it? 1116000. And so, we're now starting completely anew. From now on, we're starting afresh. Instead of the old values, whatever it happened to be, we're starting as though we'd just bought a new building at 3.072. What about the revaluation account? Well, the balance on here surely will be effectively the profit we've made on revaluation. What is the balance? I think the balance is 588,000. There is the profit on revaluation. Now, in fact, it's not a real profit because we haven't actually sold the building. We just put in a new value. We call it an unrealized profit. And, as you'll see in a later chapter, not now, but in a later chapter you'll see, because it's an unrealized profit, in fact we keep it separate. It goes to something called a revaluation reserve. But we'll look at that in a later chapter when we talk about limited companies. However, we're not quite there. We've revalued. If we were to draw a balance sheet today, then the value is 3.072 million. However, we've done this at 30th of June. Our year end isn't till December, and we have to depreciate. Normally, obviously, you depreciate based on original cost or reducing balance. If you have revalued, we carry on depreciating, but on the revalued amount. And so, our revalued amount is 3.072. We need to calculate the depreciation expense for the second 6 months. Now, as I said, the revalued amount is 3.072 million. It says there's no change in the remaining estimated useful life of the building. Well, what is the remaining useful life? Surely, when we originally bought this building, if we were charging 2% per year, the original useful life £2 a year, surely 100 divided by 2, it must have been at 50 years. So when we bought the building, we thought it would be 50 years. How many years have we owned the building? Well, it doesn't tell us when we bought it, but we do know that we've been charging depreciation of 2% each year, and we do know how much depreciation we'd already charged based on the original cost. The depreciation we've already charged, it was 1.08 million plus a bit more for this year of 36,000. It was 1,116,000. So depreciation charged was that much. So how many years depreciation had there been? The expense per year we worked out earlier at 2%. Each year is 2% of the original cost of 3.6 million. 72,000. So how many years depreciation have we had? Check me, but I think 15.5 years. So if we've depreciated 15.5 years out of a total of 50, surely the remaining life uh, 34.5 years. And now we can do it. I said from now on we'll depreciate using the revalued amount and the expected remaining life. And so the depreciation expense per year the revalued amount, the remaining life, it comes to it doesn't divide nicely, but I think 89,043. That's the yearly charge. We're only doing 6 months. So 6/12 of that, which is finally 44,522. And now we can go back and put through the entry. The expense for the second 6 months, 44,522. As always, credit the accumulated depreciation. 44, I better check I've got the amount right. 522, I'm sorry, 44,522. The cost of doing it, debit the expense account. And now let's finish off the accounts. The building stays there. Here the revalued amount 3.072 for the balance sheet. The accumulated depreciation again will appear on the balance sheet, reducing the value of the building 44,522. And finally the expense account. The total expense for the year 80,522 will appear in the income statement. Credit the expense, debit the income statement. There we are. Have a read yourself through the provisions of IAS 16 on page 50, although we've covered it as we've been doing the examples. Then have a go at the test.